G'day legends, and welcome back to the Gold Jumper channel for your weekend market breakdown. Jump up and under, let's get into it as we dissect a massive few days in the pits. Today we are looking at the huge gold recovery after that scary dip and the oil price madness. We are diving deep into the red gold copper surge and why our Aussie ASX is the place to be. Plus we cover the tech wreck in America and why the big investors are getting nervous about April. Just a quick reminder that I am not a financial advisor, so do your own homework before punting. Here is the big question for the day. Is this $4,000 gold level a floor or a trap? Tell me your thoughts in the comments, and don't forget to smash that like and subscribe button. It has been a fair dinkum rollercoaster from March 28th to March 30th, 2026. We saw gold close out Saturday at $4,505.89. That was a bloody ripper gain of over $101 in just a single day. Investors were cheering as the yellow metal clawed back 2.24% of its value. This happened because President Trump put a 5-day pause on those planned strikes over in Iran. He told the media that conversations with Tehran were actually looking quite productive and positive. Markets took a breather, and the extreme fear we saw last week started to ease off a bit. But don't go celebrating yet, because the Houthis just officially joined the scrap against Israel. By Monday morning, the 31st of March, the gold price in Asia slipped to $4,483. The safe haven demand is fighting against a super strong US dollar that just won't quit. We are seeing a real tug of war between geopolitical chaos and these high interest rates. Don't sweat the dip, just more room in the pouch as we look for that next solid entry point. Now let's chat about the black gold, because WTI oil has been absolutely all over the shop. Crude oil was at $88.87 a barrel after a massive 10% drop. The OVX Volatility Index is up 220% this year, which is totally mental. We saw oil touch nearly $120 recently before the latest ceasefire rumors. Shipping through the Strait of Hormuz has dropped by 95%, which is a total disaster. Insurance for those big tankers is up 12 times what it was before the war started. This oil spike is like a sneaky tax on every Aussie family trying to fill up their ute. It is also pushing the RBA to keep our interest rates higher for longer to fight the inflation. Speaking of our currency, the Aussie dollar against the US dollar is looking a bit bruised. The pair fell to a 2-month low of 0.687 on Friday. Traders are worried that the global growth is going to tank if this energy shock stays sticky. Our local 10-year bond yields are spiking up to 5.1% on these inflation fears. The yield gap is narrowing, and that is making our local dollar less attractive to the big whales. Keep a close eye on 0.690, because if we stay below that, it's looking grim. But our miners might save the day as commodity prices start to find their feet again. Let's look at what the big guns are saying, like that famous gold bug Peter Schiff. Schiff is calling for gold to hit $11,400 based on the 2008 pattern. He reckons the current 27% correction is just a replay of the pre-rally crash. Peter says the government has to print money to rebuild the weapons, and that means massive inflation. Even if there is peace, he believes the fiscal damage is already done and the dollar is toast. Then you have Stanley Druckenmiller giving everyone a proper scare about the banking system. He told his followers to withdraw certain amounts from their banks before April 2026. Stan is worried about private credit defaults and the stability of the traditional cash vaults. Ray Dalio is also chiming in, saying the US is making the same mistakes as the old British Empire. He thinks the shift of wealth from the West to the East is now officially irreversible. Over on Wallstreet bets, the traders are starting to eye off a SpaceX listing for some excitement. The sentiment on gold is a bit split, with some calling for a moon mission and others fearing a dump. Mentions of gold and silver are picking up as retail traders look for a hedge against the tech sell-off. Some legends on Reddit think the big banks are suppressing the price to load up their own bags. But the smart money is definitely watching those key technical levels we will cover later on. Now let's do a deep dive into why copper is the new red gold for our Aussie market. Copper is currently trading around $5.40 to $5.70 a pound. While gold had its massive rally, copper is actually looking undervalued compared to the yellow metal. The copper to gold ratio is sitting at 0.000075 right now. Historically, a rising ratio means the global economy is expanding and building new infrastructure. Copper is essential for everything in the modern world, from electric vehicles to huge AI data centers. We are facing a massive structural supply deficit that could last for the rest of the decade. Goldman Sachs thinks copper could hit $15,000 per ton by the year 2035. This is where the SP/ASX 200 index really gets its time to shine against the Americans. Our local index is heavily weighted toward materials and big miners like BHP and Rio Tinto. About 25% of our market is in the materials sector, which is a huge advantage. Compare that to the SP 500, which is dominated by tech stocks and software companies. If copper prices go on a tear, our local ASX 200 will benefit the most globally. We saw Sandfire Resources report a 94% jump in profit because of this demand. Investors are rotating out of expensive US tech and into these reliable Aussie resource plays. The ASX 200 is currently trading around 8,516 points. We are down about 8% for the month, but the recovery in miners is starting to show. While the SP 500 is struggling with high valuations, our miners are generating massive cash. Plus, our companies pay much higher dividends than those stingy tech firms over in Silicon Valley. The dividend yield on the ASX is over 4% compared to just 1.6% in America. That is a massive difference when you are looking for some cold, hard cash in your pocket. Copper is also becoming a strategic asset for national security, just like oil used to be. The US is even talking about putting 25% tariffs on copper imports by June. This will create a scramble for supply, and our Aussie mines are ready to fill that gap. So don't ignore the red metal, because it might just be the best horse in the race this year. Switching gears to the tech giants in America, known as the Magnificent Seven stocks. Apple and Microsoft and Nvidia and the rest of the gang are finally showing some fatigue. Every single one of these stocks is actually down for the year 2026 so far. Investors are getting spooked by the $700 billion being spent on AI infrastructure. They are worried that the return on all that spending is going to take way too long to show up. Nvidia is still the fastest grower, but even it is feeling the heat from the Middleeast tension. The SP 500 fell nearly 6% in March as the rotation to small caps began. Microsoft has been the biggest loser in the group as software gets punished by the high rates. Meanwhile, the DXY dollar index is knocking on the door of the 100-point level. A strong dollar is usually bad for gold, but the de-dollarization trend is changing the rules. The BRICS nations now control 50% of the entire global gold production. China and Russia are leading the charge to build a financial system that doesn't need the dollar. 95% of Iranian oil is now being settled in Chinese yuan instead of greenbacks. This structural shift is the main reason why gold hasn't crashed back to $2,000. Central banks are buying over 1,000 tons of gold every year to protect their reserves. Now let's get into the nitty-gritty of the gold technical analysis for the coming week. We are looking at the 1 hour and 4 hour and 1 day charts to find the signals. On the daily chart, gold is fighting to stay above the 200-day simple moving average. That key level is sitting right around $4,406 an ounce. If we break below that, we could see a nasty slide down to the $4,000 mark. But on the 1 hour chart, we are seeing a potential double bottom forming at 4,400. The Relative Strength Index, or RSI, on the daily chart is currently sitting at 36. That means we are moving out of the oversold zone, but we aren't quite bullish just yet. We need to see that RSI get back above 50 to confirm the momentum has truly shifted. On the 4 hour chart, the RSI is at 44.45, which is pretty neutral. We are also watching the Bollinger Bands, which have been expanding due to the high volatility. Gold is currently riding the lower band on the daily, which usually suggests a bounce is coming. Resistance is sitting firm at the 50-day moving average at 4,818. We call that the line in the sand for the bears because it has been a tough ceiling to break. There was a bit of a death cross scare recently, but a recovery could spark a golden cross. On the 1 hour time frame, the 100-period moving average is the immediate target for the bulls. The MACD histogram has finally turned positive on the short intervals, which is a good sign. It shows that the selling pressure is starting to dry up as the bargain hunters step in. Support levels to watch are 4,350 and 4,300. If gold moves above 4,600, it will reclaim a key Fibonacci retracement level. That would open the door for a run back toward the $5,000 psychological level. Traders should watch the volume because rising volume on green days is what we need to see. Institutional selling seems to be cooling off as the geopolitical risk stays high. Remember, the trend is your friend until it ends, so keep your stops tight and your eyes open. To wrap it all up, gold is showing some real grit by holding that 4,400 level. The Middle East conflict is the big wildcard that keeps the safe haven bid alive and well. Oil is cooling off slightly, which might stop the central banks from being too aggressive. Copper is the secret weapon for your portfolio, and it's going to lift the ASX higher. The US tech stocks are under pressure, so look for value in our local Aussie miners instead. De-dollarization is a long-term story that provides a massive floor for the precious metals. And the technicals suggest we are at a make or break point for the next big move. So legends, do you reckon we are going to see $5,000 gold before the end of April? Or is the strong US dollar going to keep us pinned down in the mud for a while longer? Jump into the comments and let me know your play, and make sure you subscribe for more. Stay active, stay legendary. Catch ya.